All right, welcome everyone. Today is July 7th. I hope everyone's having a relaxing weekend. So this upcoming week, we have Powell speaking on Tuesday and Wednesday, 7 a.m. Pacific. So he's going to be testifying at the Senate and at the House. And then Thursday, core CPI, Friday, core PPI. So good amount of moving parts. I would say can see some volatility Tuesday, Wednesday, but Thursday, pre-market, depending on how the market reacts to CPI, we could see a bit of a pullback, but positive reaction. We can see the market rally higher all the way into the end of Friday. So we shall see what happens. I'm gonna go over some of the questions from the thread that was posted on Saturday. So yeah, I mean, and then I will go over about 11 charts I created on Saturday that's posted in the private Twitter, and then go over a few more questions from the members. So yeah, quick introduction. So I'm Brando, been day trading for about 14 years. Started with $6,000 and grew it to multiple eight figures. So just gonna say something quickly and then dive into the questions. So with trading stocks, trading options, trading futures, you have to understand that every day is different. Every day presents different levels of risk and reward. So before a day even starts, if you enter that day with a bias, meaning if you tell yourself, today I'm going to be aggressive with my position sizing, or if you tell yourself, today if the market dips, I'm going to buy more, I'm going to average down, or vice versa. If you tell yourself, today I'm going to be more careful and I'm going to trade conservatively before the market even opens. This is how you either completely miss a move or this is how you get completely crushed. So with day trading, you have to understand that it requires you to focus on reacting to price action and actively analyzing the price action, what the market's doing as it's occurring. So if you have a bias, of course it can work in certain situations, but in the long run, that's how you build on bad habits. And eventually that's how you blow up an account because it's one of those situations where it works until it doesn't. But if you can understand that you need to get better at reacting, better at looking at different levels, how a stock acts at those levels, how the premiums are moving with the options, that's how you get better over time. So, like trading, it's not an overnight thing where you learn the strategy and you think that, okay, it's a one-time thing and I'm going to be profitable every single day now. It takes time to become consistently profitable. Some people it can take a year. Some people it can be 3 years. Some people it could be 5 years, right? But everyone's on a different timeline. So be patient with yourself, focus on learning and focus on getting better at reacting. And that's how you can become, a very profitable trader in the long run. So yeah, that's one thing that I try to talk to people about. I try to teach people because some people will ask me the question, or I see people try to, predict on Twitter, like, oh, tomorrow's going to be a bad day, or, tomorrow's going to be a good day, or, this looks really bullish for Wednesday or Thursday. And the truth is, nobody knows, right? And especially me, like, I don't know what will happen on Monday, tomorrow. But I do know that I built a really strong set of rules for myself to protect my downside. And I also prepare myself for if the market is going to rip higher, meaning I know what levels to look for and I know what strikes I'm going to pick. And I know what position sizing I'm going to consider if this stock gets to this level or if this stock breaks under a certain level. So that's the best way to prepare, right? It's not about, okay, I'm gonna sign up for this service or sign up for that, and whatever Brando takes, I'm gonna jump in it, right? Listen, that can work, right? In certain scenarios. But if you don't understand the trade, and one day I say, you know what, guys, I've done it for X amount of years. I think I'm done, right? I'm gonna retire. And if your strategy was to just follow me every day, then you didn't learn anything, and now you're kind of back at square one or square zero or square one. So yeah. So yeah, focus on just having an open mind every day, reacting to what's going on, but preparing in terms of risk, preparing in terms of what levels I'm going to trade at, and creating trade plans and understanding where you want to stop out or where you want to exit out of a winning trade. That's how you build a systematic process to where you can, look at the data and see, okay, Monday, did my trade go according to plan? Tuesday, did I break my rules? Wednesday, did I scale the way I was going to say it, the way I said I was going to do it? And that's how you can build up a strong foundation and have the right fundamentals to become a good trader. Because, of course, there's luck involved, meaning, you jump into a trade and, it can go 1,000x or 10x, sorry. But building the right foundation, you get luckier and luckier over time. And there's some of you guys have seen me trade for the past 5 years, 4 years, 3 years, whatever it is. And you see the type of consistency that I'm able to produce, on a monthly basis, right? I win more than I lose. And, it comes down to what I've been talking about of creating this systematic process. So you guys need to put in the work if you want to get there. That's pretty much what I'm saying. All right, let me drink some water. Okay, so first question from Saturday's thread, more of a statement, but it's kind of a question. So someone asked, growing a small account and getting consistent with entries. How do I do it? Okay, so growing a small account and growing a large account, what's the difference? With a small account, you have less margin for error. So if you understand that, then what do you need more of in order to go from a small account to a large account? And the answer is patience, right? It's a simple answer, but hard to implement. And when you understand that, okay, well, I need to be more patient. And what does that exactly mean? It means you need to wait sometimes days and sometimes weeks at a time for the market to line up for the right type of trades. So let me share my screen. I'm going to just pull up a chart so you guys can see a visual on this. All right. So here's SPX as a daily chart. So I'll give you an example, a recent example of, okay, well, what do you mean wait weeks at a time? How, if I do wait weeks at a time, how do I know what to wait for? Okay. So the first example here, so this is SPX, this is the daily chart. So each candle is 1 day. So prior to last week, right, SPX has been in a consolidation period since it tested 5,500 on June 20th. So since that day, I mentioned to the members and I've talked about it on the public Twitter. Okay, well, it looks like SPX is entering a consolidation period because it got rejected at a hard resistance level, right? Just round number 5,500. So as it bases here, we need to see if it can hold 5,400. And it held well above it, right? It started to build a base here above 54.44 on June 24th, and then higher low June 25th, higher low, June 26th, higher low again, June 27th, and then tested it one more time at 5,500, right? So that's two attempts at 5,500. So now we know that SPX 5,500 is going to be a level where If it can get through here, then that's going to be a good risk reward for the upside, right? And it got through there last week and it ripped to 55.70. So 70 points in about less than 3 days. It's a good risk reward for someone that has a small account. And so yeah, so you have to understand that, another thing to understand that if you have a small account, trying to day trade every day, it's difficult. And what would I, constitute as a small account? I would say around under 25,000. So if you try to trade every day, let's say 3 to 4 trades a day, in the long run, you'll have more losses than winners because you don't have a large enough account to handle the downside. So waiting for trades like this, right? It happens all the time, right? But you just have to be patient enough to wait for it, right? Another example is Tesla, right? I've, been talking about it for months. And, I told the members, you know, I don't see a trade, right? Before all this big run happened the past, week and a half, 2 weeks, I've been mentioning to everyone, well, it's basing above 167. And if it can get back near 182, it can start to, gain some momentum, right? And I bought 3,000 shares around right here, right around June 25th, June 21st, June 24th, around that range. Once it reclaimed 182, I bought at 184, right? And did it run right away? No, right? It took a few days before it got going, but we're up, I think, over 30% on those shares, right? Of course, I could have bought it earlier. I could have bought it in May, or I could have bought it in April or March, but it just didn't look like it was ready yet. But once it started to build that base here, higher lows on the daily, build a pretty strong base above 167, and then started higher low again, and then above that 182 resistance, which was a big one. That's when you can trade more efficiently, right? The way you're allocating your capital, you're seeing the returns quicker. And that's when the patience comes in, right? If you're patient and you wait for the right levels, that's when you get paid. So yeah, if you have a small account, you have to understand that if you're not patient, then you can't grow the account, not the way that it's supposed to be grown. So, and taking a step back from trading, you have to ask yourself the question, how many people do you know are actually patient, right? And if someone asked me that, I would say less than 2%. Most people are not patient people. And that's why a lot of traders aren't profitable. That's why many traders can't make, $1 million, $2 million, $10 million, whatever the amount is. So if you can understand that and then learn to be patient, then that's when you can separate yourself from most people. All right. Okay, what's the next question? Okay, so next question. So someone asked, I'm closing out of positions due to stop losses too soon. I figure if a position is down 40%, it's time to cut the bait. Nothing worse than when it rips after that. So yeah, this is a common question I get. Brenda, I get stopped out too soon. And for this specific question, if you're getting stopped out at 40%, and let's just use a dollar amount. Let's say you bought in for $1,000 position, you have a $400 loss and you jump out. So this is what I would do. So instead of buying $1,000 worth of that position, just buy $400 worth, and that'll widen your stop loss to zero. So the beauty behind trading options is your risk is defined when you enter, meaning when you buy calls or buy puts, it can't go beyond what you're risking. So rather than stop out at 20% or 30%, just understand what you're willing to lose and just buy that amount, and then you will be able to realize the potential of what that trade can do. Because you're saying there's nothing worse than when it rips right after that. So if you say that this is the worst possible scenario, meaning you get out and it rips, then by you buying just that $400 worth, you will never be in that position ever again of there's nothing worse because you already have size for that, that potential uh, scenario, right? And to me, it's a good feeling because now you know that, okay, well, I bought this amount and whatever happens, happens, right? And then you take the emotion out of the trade, the psychological part of, wondering, what can happen, it's gone, right? You're more objective and you could potentially see this thing run 500% or 1,000%, right? Because even if you held that $1,000 position, you'll sell soon anyway. You'll sell at 50% win or 100%. But if you understand that, okay, well, $400, whatever, that's my stop loss, and whatever happens, happens. Maybe you'll hold it for 500%, 800%, 1,000%, and you end up making way more than you would have if you just held that $1,000 position. So yeah, when you're first starting out, it's going to be a bit more of a slower growth because you're still trying to learn what works for you, what your risk tolerance is, what type of trades work for me, what are my high probability trades I should wait for. There's a lot of learning in the beginning, and you have to understand that. Don't rush to make 100 grand, 500 grand. It comes over time, right? And when you do get to that position of, okay, I'm up 500 grand, you want to make sure you have the right fundamentals, right? The right foundation in order for you to hold on to those gains. Okay, next question. Identifying the stock moving play, seeing the price action in terms of applying the options to it. So yeah, I mean, for this, like trying to figure out what stock to trade, you have to line up the stock with its key support and resistance levels, and then you look at the index and where it's trading at. So if you see similar stocks in the same sector displaying strength, example, like chip stocks, right? If you see some of them, no, it doesn't have to be all of them, but if you see two or three moving together, holding above key support levels, and then you see the index they're trading in holding above, key support level. Example, like SPX above 5,500, QQQ above 488, right? NVIDIA's holding above 126, AMD above 164, LRCX above 1043, AVGO above 1,700. I mean, there's so many more. Like if all these things line up, and then you look at, and then you try to broaden your scope a little bit more, you see Apple holding up above 220, Meta, above whatever, and then other stocks like Amazon above 200. I mean, there's so many examples. Then that's when you can really kind of hone in on, okay, well, I'm going to pick a sector leading stock, a mega cap, and that can work. So yeah, that's like looking at price action, looking at the index, taking a step back, looking at other, tech stocks. If all these things line up, all you have to do is pick one, right? Pick one, understand the resistance level where it's at, and then trade off of those levels. All right, so yeah, that's pretty much all the questions from there. I'm gonna go over the charts really quickly, and then there's a couple more questions I'm gonna go over from the member thread. So give me 1 second here. Okay, so water here. Okay, so here's Apple, right? Do this chart every week. So Apple finally broke out again above 220 this past week. I mentioned this last Sunday. Watch 220. If it can get through there, then it should rip again to 233. So close at the highs on Friday. Bullish. That's a bullish type of close, closing at the highs of the day. So it looks like this can go to 233. If it gets to 226. Ideally, what you want to see is 220 hold this month, right? And if it can't hold there, we can see another consolidation period. But yeah, anything about 226 early this week is setting up for a move higher. AMD started to show some signs of momentum on Friday. So pretty simple trade here, right? Um, over the next 2 weeks, just watch 174. If this can close above 174 on a daily candle, You could see 184 within the next week and a half. Right. So keep a close eye on that level. 226 in play, right? When this thing starts to move, it moves pretty quickly, but when it's basing, it's very choppy and it lasts longer than people realize. But looks like it's almost there. It's like I would say 174 is going to be that range. Um, let's see here. ARM closed at 181. Hold on one second, guys. Sorry, I just had to send a message. Okay, so ARM closed at 181, got through that 174 on Friday, had a pretty good move here. So it looks like through 183, we got 189 and then up to 200. So 200 in play this month. Pretty strong move here. It's looked pretty good since dipped down to that 85 back in April. All right. All right, AVGO. So yeah, this one gapped up on Friday and then trying to reverse lower all the way into the close. So yeah, I mean, if it can hold 1700 early this week, it could pop back up another 45, 50 points. So yeah, through 1769, we got 1837. So maybe a couple of days of consolidation. This could rip higher later this week. Don't love that candle on Friday, so it might take a couple of days to find a bottom, maybe above 1682. LRCX, so close at 1087.80. 1100 test should come this week through 1100 and go to 1132, 1144. So this one's been basing for a few weeks here, but higher lows on the daily past few days. Looks like it's almost ready here for a breakout higher. Meta closed, yeah. So we caught Meta on Friday, right? Meta cut through that 532 here, so close near the highs. 551, 560 in play this week. So I do like this one if it dips, right? If this dips to 532, back test it early this week, I do like it right there for a bounce play. So I think that's a better risk reward there. So Microsoft closed at 467.56. So yeah, another one that looked pretty strong on Friday. Looks like this one wants to run a 500 this month. All right, so calls going to go 466. So interesting trade here. So if this dips to 460, right, Meta dips back to 432, the similar type of trade. I do like both of them if that happens, but we'll just have to take it day by day and see how it acts, how the market acts, leading into Powell's testimony on Tuesday and Wednesday. Okay, so SMCI closed at 846. So this one's been kind of tricky, right? We bought this at eights in the 860s, went to 1,000 and change, and then since then it's just been chopping around here. But it looks like it should start to bottom above 812. I'd like this to 857 as a day trade this week. Hard resistance at 900, but if we get to there, can set up for 970 again. All right, so here's Tesla, right? And when you look at this chart, this daily chart, the first thing you have to understand that it's made a huge move, right, in a few days, right? Over, well over 20% in the past week and a half. So if you didn't trade it last week, right, or the week before, then up here it's going to be a worse risk reward for you, meaning it could top out here if it can't hold 249. Even if it gets to 255, you got more resistance above between 261 and 268. There's a lot of resistance there, right? So where's the next like big level to trade this in the future for the rest of the year? So is this closer to 268 this year? It can go to 300, right? So that's the next like big level to consider. But it's made a huge move, right? 30% in the past week and a half, 2 weeks. So yeah, I mean, is there still opportunity? Yes. But if you didn't trade it, you have no profits to play with going into this week. So just be aware of that if you missed it. But we'll see. We'll see what happens. I just kind of um talking trying to just show you guys like, okay, well, is it worth it for me? It just depends. It depends on if you were in it already and if it's your first trade on Monday on this and you size into a big position, that's not a good risk reward just from looking, face value of what we see here on the daily chart. Okay, so QQQ got to 488 finally, right? It really ripped once it got through, right? 500 in play this week, right? If it gets to 500, we can see 504, 513, 500 hard resistance. Why? These round numbers tend to be hard to get through. So just be aware of that for QQQ. Okay. SPX close to 55.67. So yeah, I mean 5,500 was that level last week, got through, caught some of that. So 5,600 is going to be in play this week if we get to 55.68. Later this week, if we see some kind of dip, right? If this dips to 55.36 and holds, I like call for a bounce play there, right? You know, for now, we'll just have to gauge and see how the market acts around that level. But if the market just holds up here about 5,500 SPX, then yeah, I mean we should see it move to 56.44. Okay, a couple of chart requests from the members, MSTR. So Bitcoin's bouncing a little, right? Kind of dipped. I think here it's dipping again. So like 56.8 right now. But yeah, I would say let's just let this thing drop for now. I think it's still just trying to find a bottom here. So I don't really see a trade on that one. Applied materials, don't have any levels on this, but looks like looks pretty good here on the daily charts at all-time highs. 250 should be 250 to 300 in play this year, I would say. Okay, Mercado Libre. A daily chart here, a bit of a move higher on Friday. 1658. I haven't charted this in a while. 1658. So I mean, like up to 1700 in play. Max move, maybe this not max move, but 1689 and then 1780s possible, but not when I trade options on too often. MARA, I mean, there's better Bitcoin plays. This one doesn't really move, hasn't moved in a long time. Someone asked about Netflix. So yeah, Netflix looks good here. Moving with tech, 700 in play this week. Through 700, I'll have to draw more levels, but yeah, it's a similar trade to Google, Meta, Microsoft, Apple, right? They're all kind of moving together here. So 700 test should come this week. Calls can work above 689. All right, so let's see here. Someone asked a question. I'm sure you've heard this before, but trying to match your entries is tough. And trying to buy a bit of time getting your strike prices a little further out, usually a week or two out rather than the weekly. I'm not really having much success. Any suggestions? So yeah, I mean that isn't so when I enter a trade, it's gonna get crowded at the beginning, but trying to match my entry, it's not really a strategy, right? And I try to talk about the trade before I enter. So for some of the trades, all right. So even the trades that I do enter, I would say 90% of the time they go below it. So I'm not sure, trying to just mimic my entries or my trades is not really it's not a great strategy. But yeah, I mean, going a week or two out can work too. I mean, if that's been what you've been trying to do the past few weeks, I mean, it should have worked, right? The market's been moving, but you'll have to give me specific examples of what you've been trying and what hasn't been working, and maybe we can talk more about it, about something more specific. But yeah, no, I wouldn't try to just chase my entries. That's not really a strategy, right? And I'm telling you, 90% of the time it goes under it. So yeah. Next question, and hey, hello, Brando. In your upcoming call, can you include how to scale up uh, the calls when there's momentum in stocks? My account is a modest size, but I don't know how to size properly out of fear. Always take smaller size. So I mean, it depends on the trader, right? It depends on your account size, and it really just depends on what the money means to you. But when there's momentum, right? When let's say SPX 5,500, QQQ at 488, and they're breaking above, and other stocks look really strong, Meta, Microsoft, Apple, Amazon, right? Then if I'm taking normally let's say 100,000 for calls, right, $100,000 position, then for me maybe I'll double it, right? But that's me. That's different for everyone. So that's how I would scale. I mean, if things line up, you have to take a shot, right? You can't trade the same size every day. It'd be difficult to handle your downside when the trades don't work. So for me, I might double it. Sometimes I'll triple it, right? Just it really depends. But if you have a small account, right, like I said at the beginning of the call, you have to wait for these moments, and then that's when you can really, take a little bit more risk. But it just depends on what the money means to you, right? If it's your last dollar, right, this account, then yeah, I mean, it'll take you time to grow it, right? Just trade small, right? Learn from the trades, and then you can go from there. So yeah, I mean, that's pretty much it for today, right? I hope you guys found some useful information from what I've been talking about, and a few different moving parts this week. We got Powell on Tuesday and Wednesday, and then core CPI Thursday, core PPI on Friday. So July's been off to a good start. We should see many more opportunities all the way into the end of the year. So I'm excited. I'm looking forward to trading with you guys and helping to help you guys navigate to this market. So thank you for taking the time to listen to me speak. I hope everyone has a good rest of their Sunday, and I will see everyone tomorrow morning. Thank you.